Hi, this is David Daughtry with Copperwind Financial. We wanted to do a Dave's Talk today to talk about the economic impact of the current presidential election here in the U.S. Everybody is on one side or the other. It actually is sort of a sad commentary that the majority of the people don't like either candidate very well, but that's where we're at right now. We hear a lot from our clients of what is going to be the impact if Hillary gets elected or if Donald Trump gets elected. And we've done quite a bit of work looking at that. And the reality is, from a pure economic standpoint, for the first 2 years, there's probably not any material economic impact, simply because you're not going to have anybody probably that will have a filibuster-proof Senate. And without a filibuster-proof Senate, you're probably not going to get any controversial laws passed. So Hillary, where she talks about changing some on the tax side and doing a big jobs bill on infrastructure, probably couldn't get that passed. You've got Donald Trump that's talking about reducing taxes and doing some other stuff on the entitlement side that he thinks will help the economy. Probably not going to get that passed through the Senate with a Democratic filibuster. So the first 2 years, and why I say the first 2 years is a lot of times you'll see in midterm elections a significant amount of changes from a political standpoint. And if somebody did get a filibuster-proof Senate, then they could make some major changes. There probably will be some changes because there is some consensus across both the Democrats and the Republicans and the independents that we should do something to fix Social Security, probably increasing the full retirement age for those that are in their 20s and 30s. So that it goes up to 68 and 69 and 70 over the next 20 or 30 years. There's also some consensus that we probably should reduce corporate tax rates, because our corporate tax rates at 35% are some of the highest in the world. If you look at Ireland, they're at 16%. And what we've seen over the last decade is a lot of companies that are either moving overseas or doing their business so that from a tax perspective, more of their taxes are paid overseas at lower tax rates, and they're keeping money offshore. So I think there is some consensus to get some of that change, but not huge numbers. Where you will see an impact is in the markets potentially, not from a pure economic standpoint, but from an investor sentiment standpoint. The markets at any given time can be 10 to 20% overvalued or undervalued. Right now they look like they're overvalued a little bit, but that investor sentiment can move that without any economic impact at all. We're hitting new all-time highs on some of the markets, even though we've had 3 quarters in a row where the S&P earnings have declined, which tells you that the markets are not based pure on economics. A lot of people are looking and saying, as long as they're printing money around the world, we're going to continue to have markets that go up. They will until they don't, and we're seeing that in Japan. Japan continues to print money in the last year. Their market's down 20%. So when we look at what the election's going to do, it will have a lot of impact on the courts, as the Supreme Court and appellate court judges are appointed. Foreign policy, it'll have a lot of impact, but for the first 2 years from a pure economic standpoint, probably not a lot of change. So hope that's helpful. We think it's going to be an interesting time, but who knows who wins.